All right, good afternoon, everyone, and welcome. We're so glad to have you here to be a part of our UST education series. Today, our topic is monthly cadence, your key to a seamless fiscal year end. My name is Nicole Crabtree, and I'm the Director of Events for UST, and I'm going to be your host today. Some of the course objectives we'll be covering today are listed here. While you take a look over those, I'm just going to remind you that today's webinar is eligible for CPE and CAE credits. If you'd like to receive those credits, please place your request in the chat now, and be sure that you have your first and last name listed in your Zoom profile. On the screen now, you can see the timeline for today's webinar. I'll be introducing the instructors shortly, and we'll kick off with a brief ask of the audience. But first, I want to share with you a little bit about our format, especially for those of you that are new to UST Ed. Our structure is a little different from some webinars in the sense that we do encourage audience participation throughout. If you have a question or a comment during the webinar, please put it in the chat, or you can use the raised hand function in Zoom if you'd like to be called on. Or feel free to be brave and unmute yourself during a pause and speak up. As we go through the webinar, our instructors will have several engagement discussion type questions for you to answer. If you are requesting CPE and CAE credits, you are required to answer a majority of those in the chat. That's our record of how we know that you're here and attending. So please do that. But those questions also help facilitate the discussion. So please, everybody, feel free to join in, even if you're not requesting credits. If time permits, we'll have a little question and answer at the end, but we really do encourage Q&A throughout the webinar. And as a final note, please be aware that today's webinar is being recorded. Today's webinar and all of UST Ed is powered by US Transactions Corporation. UST is a merchant services provider specializing in associations and nonprofits, and we're fully integrated into all the major AMS systems. If you'd like to have a conversation with us about how we can improve your PCI compliance, your credit card processing fees, or your reconciliations, please reach out to Julie Duncan, our association practice leader. Candace will put Julie's contact information in the chat for you. So save the chat at the end and you'll have that information for follow-up. Today, our instructors are Gerardo Martinez and Tracy from the McKelvey Group. I look forward to hearing all the expertise they have to offer on today's topics. But before I hand it over to our speakers, I want to pause here for just a moment and give everyone a chance to put into the chat what you'd like to get out of this webinar or what your top of mind awareness is for today. Your answers will help our instructors provide the best experience for you and address your purpose for attending. Also, this counts as your first question for credit purposes. So if you're requesting those credits, be sure to answer. All right, keep those answers coming into the chat. And Tracy and Gerardo, if you want to go ahead and get your slides queued up, we can do that. Wendy says she's looking for some helpful tips that might help things go more smoothly year over year. John would like some time-saving techniques. Shelby wants helpful tips for end-of-month close. Jim's looking forward always to a better way to close. I hear that, Jim. All right, I'm going to hand it over to our speakers now.
All right, perfect. If you could just give us a second to sort out some last minute technical issues.
Sure, no problem.
All right, perfect. We're ready. Okay, so thank you everyone for being here. As has been said, the topic of this webinar is going to be the monthly cadence, your key to a seamless fiscal year end. My name is Gerardo Martinez. I'm an accounting consultant for the McKelvey Group, working with for-profits, nonprofits, and government contractors. I'm a QuickBooks Online and QuickBooks Desktop Certified Advisor, and once again, it's a pleasure being here.
And I'm Tracy Vanucci. I'm the controller at the McKelvey Group, and I manage all finance and accounting operations, coordinate and direct the preparation of budgets and financial forecasts, and prepare and publish timely monthly financial statements. And I work with both government accounting, government contracting, and also various commercial and nonprofit organizations. So let's get started.
All right, thank you. Okay, everyone, so this is going to be our agenda for this webinar. We have about 7 topics that we hope that's going to be very helpful for all of you. I know that based on your based on some of your comments, you're looking forward to some of these sections, including the best practices for a smooth monthly close. We're going to be looking at some tips, adjusting entries. Some of you may be familiar with them, some of you may not. We do have some tips, as well as some factors to consider when budgeting, some tips for backup and cleanup, and as well as you may know, nonprofits do have a requirement to file 990. So anything that can help an organization improve those processes in filing a 990, it's always welcome. And finally, contribution statements, what are they, how to prepare them, and best recommendations. So we do have a polling question for all of you. So if you may type in the comments your answer to the following question, which is, what is your organization's fiscal year? We'd like to hear, or we'd like to obtain some of your different perspectives. All right, so seeing that most of you are on a calendar year basis, for those of you that perhaps are not part of an organization, but rather a third party, you may input the most common fiscal year that perhaps your accounting clients have. And if neither of those apply, you may type in the fiscal year of a major nonprofit that you may know of. All right. Okay, so thank you for all of your answers. Let's look at first, define what a fiscal year is. So a fiscal year is a 12-month period used to track finances. And this 12-month period can either be on a calendar basis, which most of you indicated you are a part of. This means that it starts on January 1st and ends on December 31st. But as an alternative, other organizations may have the option to run a fiscal year under any other 12-month period or 365 days, which must be consecutive that is meaningful to the organization. As some of you indicated, you may have a fiscal year ending on June 30th and starting on July 1st, which means that it still spans 12 months, but it's not from January to December. Let's look at the following slide. Okay, so given that we have defined what a fiscal year ends, there may be different reasons why a nonprofit may want to choose a fiscal year that is not on a calendar year basis, and those factors can basically be summarized into 3. These are seasonality, grant cycles, and audit requirements. So for the first one, seasonality, that means that this may be a factor if an organization, for example, has a major fundraiser, which occurs in the summer. And if this fundraiser is intended to increase the amount of general fund that a nonprofit has, then they may want to do that in the summer, and then immediately after the fundraiser, start their fiscal year during the fall season. By doing this, a nonprofit will have achieved the result of having a replenished general fund for the start of the next fiscal year. Second, we have what is called grant cycles. Okay, so as most of you may have heard on the first webinar that TMG co-presented with UST, many nonprofits receive what are called grants, funding from third parties, and so another option for a nonprofit to choose as a fiscal year basis may be based on the requirements by donors based off the fund's usage report. So in other words, what that means is that nonprofits may have their fiscal year be the same as a reporting period required by donors who want to know how funds were spent. For example, if an organization's primary donor, let's say an organization that contributes 1/3 towards the general fund, requests that a report of how the funds were used be prepared for the periods of July through June, then a nonprofit may have the option to use those dates, which are the same as a fund's usage report, as their fiscal year. Another factor includes audit requirements. So let's say if a nonprofit has an annual requirement to submit an audit, they may choose to have their fiscal year and on a period that has less activity. The benefit of choosing this type of fiscal year is that a nonprofit will have enough time to gather audit evidence and prepare for the audit. Okay, so if anything that we want to learn, if anything that we want to take as a key takeaway based off this section is that an organization should consider seasonality, donor, and audit requirements as factors when choosing a fiscal year. We may continue.
Okay, and actually, before we move on to the next topic, I just want to ask, Caroline, I noticed you had a June 30th end of fiscal year. Is there any reason why you guys go mid-year, or do you know? Or you could type it in. Or for bylaws?
Bylaws.
Okay. I know like a lot of like PTAs and everything go from July 1st to June 30th. And it is set by the bylaws. And as Gerardo had noted, there's reasons why they will set the fiscal year at a different time, like not with the calendar year. Okay. Next thing we're going to be talking about is the best practices for a smooth monthly close. And one of the things we stress is that make it a habit reconciling certain accounts on a monthly basis to do things on a monthly basis, and it just makes your year end that much easier. And I'm sure most of you, if not all of you, reconcile the bank accounts, credit cards, and the loans and line of credits each month. And one of the reasons why we recommend doing this is there's a better chance to catch any errors, if there's any disputed transactions. If your organization has multiple people have a credit card, then you ask somebody 3 months down the line, hey, what was this charge for? They may not remember. But if you do it every week, every month, then they're more likely to remember. You can kind of catch these things instead of at the year end when your tax accountant's asking you what happened here, and then it's much more work to have to go back and look for the history. The other thing is also it's helpful to have like if there's any uncashed checks or bill payments, especially these days. We're having a lot of clients who mail a bill or mail a payment and then it doesn't reach their vendor. And so if we're following up and reconciling the accounts every month, it helps to reduce these types of things and then to kind of get it resolved quicker. Next slide. And one thing that we recommend also is to use your accounting systems features to schedule recurring but easy to forget tasks. And some of these items would be like paid time off accruals, depreciation and amortization expenses, and prepaid expenses. For paid time off accruals, how many of you have, like the reason why we would accrue accrue paid time off is based off your employee handbook, the policies and procedures for your company or organization. if an employee leaves, then they'll get paid out on their paid leave. Do most of you, if you guys just want to kind of just do a quick, that you do pay out vacation, because not all companies or organizations do. Okay. So Wendy said that they do pay out the vacation, but they don't accrue it during the year. They just do it at the year end. And one of the reasons and John is saying that they pay out at termination, they just accrue, Jim accrues at the year end. One of the reasons that we would recommend accruing it out every month is that it's not a huge hit to your statement of activities just for that month when the employee leaves, because you know that your organization will have to pay them out, when they leave, hopefully not for a while, but every month you'll have that expense on your statement of activities, and it just kind of builds in the liability account. And that way it's easier to see how your finances is like when you're looking at the operational finances of the organization. And the same thing with depreciation and amortization, excuse me, expenses. Usually you do that when you buy a fixed asset that's, a large cost. And instead of having it impact just 1 month and kind of causing a blip in your finances, if you put it on your asset account and then just amortize it or depreciate it each month, then it kind of spreads out and allocates the expense out for, the life of that asset. And in a similar manner with prepaid expenses, a lot of us will have to pay insurance ahead for like the upcoming year. And it's that same kind of theory of, instead of having a huge hit in 1 month, kind of allocate it out. And it really is, it's, when you like for insurance or anything like that, you're not only using it at that one point in time, it's for the whole year. And so that expense should be shown across all those months. Let's see, next slide. And the W-9s. So it's really important to collect your vendors' W-9s. Often we will make it a requirement that before we make the first payment that we have to have their W-9. It helps collect their information for the 1099s that are prepared every January. So I know most of you are on the calendar year, but even if you're not on if your fiscal year doesn't match with the calendar year, you do have to get the 1099 forms out by January 31st. For any vendor that you pay over $600, for any specific non-employee compensation, such as services, rent, and legal fees. Next slide. So then my question to you is, do you guys know the difference between a W-9 and a W-4? And you can unmute. It's not a very quick answer, or you can put it into the chat. Okay, so to let you know, so a W-9 is what we give to our vendors to get information from them, like their address, their legal, their tax name, their and their tax ID number. And it's the company just retains it for informational purposes and for our files, because like I was saying, like in January, we have to prepare the 1099 tax forms, and that's for any vendor, independent contractor, freelancer, any other individual who receives these non-employee compensation from the company. A W-4, on the other hand, are for employees of the company. And that's the employer will use it to get information as when they are preparing payroll, how to direct the amount of taxes to be withheld and sent to the appropriate agencies. So W-9 are for vendors and W-4 are for employees. That's the short answer. And Shelby got that answer. Okay, creating custom reports. So within the accounting software, You can create custom reports, and it's great to save time because every month, every quarter, every year, you're going to be needing to create the same types of reports. One of the big ones that a lot of nonprofit organizations will need to create is a funds usage report. And it basically shows how the funds were used on a fund per fund basis. And this is important if you have a restricted fund and you have to report how those funds, those funds have to be used for certain expenses. And by having a funds usage report, it clearly states, here are the funds, here's what those, the expenses associated with the funds that were used. And these often have to be reported to the grantor. But even if you don't, it's just helpful to kind of track your expenses for each fund. And when you have an audit, these types of reports are very useful. And then another custom report that is very helpful is an open bills report. And oftentimes the person who's doing the bookkeeping is not the same person who's doing the payments. And so you can create a custom report that automatically gets prepared. That way, the person who's responsible for paying the bills every other week or whatever your AP schedule is can get that report and make the payments. Okay, and continuing with the best practices for smooth monthly close. One thing, although it's tedious, is to update your subsidiary schedules. And this would include like the inventory. And if not monthly going, and actually doing an actual inventory, at least quarterly. And you also want to make sure that you account for any in-kind donations that came in and went out, and to reconcile any on-hand inventory against the balance in the books. The other thing that we want to make sure that we update the schedule of is a PTO liability. As we had mentioned, every month, just based off of, what your employee handbook says as far as the amount of PTO that an employee will earn and their salary, you can, accrue that amount. And then if an employee comes in or leaves, you want to kind of adjust that book balance of any use it or lose it leave balances. And especially at the end of the fiscal year, you want to make sure that your balance matches your timekeeping system. The third subsidiary schedule that we would recommend updating is the deferred revenue and liabilities. And this may not apply to all organizations, but let's say that you have membership dues that are like an annual membership that they pay at one time. You want to make sure that it allocates out for each month, that each month's membership is recognized. And these are like just the small details that an auditor would check. So although it takes a little bit more of your time, if you do it every month or every quarter and you keep it up to date, then you can reconcile these and avoid any issues or complications. And that red flag, it doesn't get raised by the auditor. And the next slide kind of just sums up the key takeaways from this whole section about the best practices for a smooth monthly close. The year end is best served if you're working on it all year. I mean, ideally, you want to set up a financial calendar, have a month-end close checklist, just to make sure that you're doing all the different tasks each month. And it just makes everything easier. It's more value added. And it's easier to update transactions, as we were saying, if you're asking people, within that month, hey, what happened with this transaction, versus trying to figure out something that happened 10 months ago. And if you've been doing it all along, it just makes that year end that much easier to do. All right, the next section here is about adjusting entries. What are they and how to use them? So basically, an adjusting entry, it's a type of journal entry, and it's made to properly match revenues with expenses to each accounting period. It also helps to relocate balances between financial statements, like the statement of financial position and the statement of activities, or between accounts within a same financial statement. Next slide. And when do we enter these adjusting entries? So Usually, if you're not doing it, I mean, you could do them every month depending on the type of entry, but usually adjusting entries are done at the end of your fiscal year. So for most of you who have a calendar year, on December, you would just date it as December 31st. And then anything else that goes in December that you would normally put at the end of the month, we recommend putting it in as December 30th, or the second to the last day of the month. And the reason why is that when you run a year state, a year financials, you can go up to that December 30th. So January 1st to December 30th, or July 1st to June 29th. And you can get a good picture of your company's, your organization's financial history. And then any adjusting entries you could just pull just for that day, or you could see the financials with all the adjustments in there. And so even though like most entries that you would enter in the month would be on that last day, it's okay to backdate it one day. And the next slide. Yes. Okay. So so by doing this, you run a report the last day of your fiscal year. You can see all the adjusting entries. A lot of those will come from your tax accountant. So a lot of times you send over the financial statements, and the tax accountants will prepare the taxes, and they will recommend certain adjusting journal entries. And you put those in on that last day. It won't affect your operational finances, but then you can always run a report to include or not include those adjusting entries. And it just, like we said, it helps to get a clearer picture of the actual operational finances. Any questions so far? You can enter it in, or you can unmute yourself and ask. Okay, let's keep moving on.
All right, thank you, Tracy. Our next section, it concerns budgeting and forecasting. And so around the last quarter of each fiscal year, it's a very busy season for major nonprofits, for organizations, because it's that time when a budget has to be prepared for the following year. So probably most of you are already working on one. If so, good job. I mean, we do have additional tips that can help you with this. I know that some of the nonprofits that we work with, uh, budgets have to be prepared by December, because they have to go through an approval process with the board of directors. So anything that can help us build a budget, streamline it, it's very welcome. All right, so budget. So a budget is something is one of the many financial statements that both for profits and non-profits companies use, and the main purpose of the budget is to plan out scheduled incomes and expenses for following periods. Okay, and so there are many ways to build a budget and a forecast. And so the first, if anything, the first step that a company has to take in order to choose a appropriate budget is to look at meaningful metrics. Okay, and so these meaningful metrics may come in a variety of forms, but generally they come into two. Usually they are metrics such as prior year's actuals and budgets, and another metric is expected changes. And so these changes may be dollar changes or percentage changes. So to clarify, or for the first one, prior year actuals and budgets, what this means is that if a nonprofit, um, um, a nonprofit may have the option to either choose last year's budget or the last year's actual result as a basis or as a performance metric, so that they can use in the next year's budget. So in short, what this achieves is that it allows a nonprofit to easily compare the performance of a specific month against the performance of the same month in the prior year. So that's one of the reasons why a nonprofit might choose to do that. For the second one, this is mainly done. Let's say if a nonprofit has specific goals such as those defined in bylaws or such as those brought up during discussions of board of directors that they would like to translate into financial data. This is another route that they may take. So for example, let's say that a nonprofit has disclosed to the public that they want to achieve a 10% year-over-year increase in membership. They may be wondering, like, where do we start? What do we take into account of this? So they may have to look at how much they are charging for specific memberships, of how much they have, how many members they have currently, and so they may calculate based off that a percentage change to that they may translate over to a revenue number. Separately, if they wanna, for example, calculate certain expenses such as salaries for their hourly and salaried employees, they may want to translate what some of the expectations that they may have for their employees, such as a fixed amount of a fixed dollar amount raise or equal adjustment. And so those may be some of the examples that they may use as metrics to build a budget. Let's go to the next slide. Okay, so additional factors that a nonprofit may use to build a budget include their new revenue sources, big budget item expenses, and new employees and more contractors. So let's say if a nonprofit expects to have a new source of revenue, such as online training modules that they're going to be incorporating into the next fiscal year, they may want to create a separate line item within their budget to account for that revenue source. Now, if that new revenue source will also bring additional expenses, the budget must also account for big budget item expenses. For example, if this new revenue source will require that the nonprofit open new locations or expand to a new state, the budget must account for those expenses. And finally, if this new revenue source will require that there be more employees or more contractors, the budget should reflect these increasing expenses that are required to support the new revenue sources. All right. So as we said, timing is key. Okay, timing to prepare a budget is key. As we said, start with enough time. We suggest that a budget be prepared preferably by the end of Q3 of each fiscal year. So for those that are in a calendar year, the period after September 30 should be the ideal period to start a budget. Okay. Additionally, a budget should allow for enough time for revision. So as you may know, people have many different opinions. As probably during board of directors listening, there may be different opinions thrown into what the numbers should look like for a budget. And so given that there's going to be a lot of back and forth, to consider enough time for a budget review. And finally, because there's going to be a lot of versions of the budget going around, make sure to properly account for them. So one of the tips that we do over here at the McKelvey Group when we help nonprofit is, for example, if a budget is created on Excel, we use what is called versioning. So whenever at the end of the name of the file, we would put version 1, and then if a major change is made to that budget, we would create a copy of that budget and name it version 2. So that way, for example, if this new budget is being revised, but people prefer numbers that were shown on version 1, you already have a copy of the first version, so that means that you can easily backtrack and obtain the figures from them. So if you have instead overwritten your first budget, you may have lost those numbers. Next slide. Okay, and as we have emphasized throughout this course, make it a monthly approach, okay? So perhaps you may want to create a budget each once a year. So for example, right now you may want to create a budget for 2022, but one of the things that we suggest is that instead of creating a budget every 12 months to do it through a monthly approach. So what this means is that you incorporate what is called a 12-month rolling forecast, which is in addition to your budget. And each month, as you're doing your monthly close that we discussed a couple of minutes ago, the subsidiary schedule updates, the reconciliations, you could also add this to your closing task to add to your rolling forecast. So that way, when it's budgeting time, you're not gonna have these big number surprises. And finally, our key takeaway is make it a monthly approach. Although it's an annual task, a monthly approach is recommended. All right, thank you.
Okay, so our polling question is, what are some typical year-end tasks that are performed to close out a fiscal year? And again, you can type it up into the chat, or if anyone wants to unmute and speak, that would be great. Okay, I really, Jim's response, your response made me chuckle. He had prepaids, accruals, balance sheet adjustments, and review everything, which is very true. You want to just make sure that everything is set. But as we were saying, if you do it every month, although you will still at the year end review everything, it should make that process a lot easier. Jason, I'm going to leave it to you if there's anything else you want to highlight.
These look all good to me, but I will take a moment though to ask, since we have a pause here. Earlier on, I think her name is Caroline, had asked about board engagement. And since we're talking about, closing the month, and like, I know at McKelvey Group, we share that information with the board. Can you guys give some tips on how to get more board engagement?
Well, actually, Caroline, could you expand on the question, like board engagement, as far as getting the budget set, or having them more involved with the monthly or the quarterly financials? And if you don't want to unmute, you can just kind of type in a little bit more detail. Engaging the treasurer. So Caroline's saying, yeah, to engage the treasurer, get the boards to engage with reports. So a lot of times I will say, and I'm sure our team can also chime in, but getting the board, like when you show a spreadsheet of numbers to people, a lot of people will just kind of glaze over and be like, it's fine. And so oftentimes we will try to show it visually in a different way. We can have charts that kind of show the revenue of coming in versus the expenses, year over year comparisons. And also, like, if you make it part of your monthly cadence or the quarterly cadence when you have, depending on the board meetings, but involve them in the forecast and, kind of to explain, okay, the reason why we need this is so we have this big event coming up and we need to have these expenses. I think that will help to engage them more. And we also like to kind of summarize things up to a higher level, because when you're looking at too many details, it's kind of hard to see the bigger picture. And so if you just see a summary of like the top 2 or 3, revenue sources, the top 2 or 3 expenses, and then it'll be easier for them to kind of see a big picture. Matt, I'm sure you have some suggestions as far as how else we can get the board to be engaged. Throwing you on the spotlight, but let's see.
John has said.
I'm sorry, Tracy. I was just trying to find the mute button. I apologize. I think it actually really depends on every organization, right? I mean, it depends on the actual engagement of the board at the time. And I think the most important thing that I find with engaging the board is you ask them what they want, right, up front, and you try to present it that way. And then when they ask questions, they ask things in the discussions, you make sure that in the future discussions and presentations of the board, you make sure that you already have that included. And then when you need things, you can reverse that and say, hey, I really need these things in order to be able to give you your information when you ask for it. I know it sounds very simple and oversimplified, but I found in my experience has been that when you get them what they need and you relate what they're asking for to what you need from them, you get a better engagement from them. I don't, Tracy, if that helps answer the question a little bit, but that's what I would do, because it's just going to be so unique to each of you. It depends on the personalities of the board, their availability, how much, what other things they're doing, their knowledge on the subject of finance, accounting, et cetera. So that's my take on it, Tracy.
No, I agree. I really like the fact of just like asking the board, what they want from it. I mean, a lot of times, depending on the organization, sometimes the boards will change every 2 to 3 years. And so, you may need to take a different approach with, the different composition of the board. So asking them is a great way to kind of like, that way we can kind of, prepare the reports to get what they want. But like, as Matt was saying, then also you can say, because I want to get you these reports or these analysis, I do need some feedback back from you.
And I do want to say that John Dripps, I like his answer here, and it's very similar to what we're all talking about. He says board engagement starts with orientation, board duties, ways staff supports the board, basic training and how to understand financial statements, an overview of the financial calendar, what happens and why. So it's just answering those questions. They're going to be more receptive to just having a spreadsheet run with just numbers on it. It's just our job to sort of analyze and summarize and explain the reasons, why, what the numbers mean, basically. So thanks for that.
Okay, I really like that. Okay, let's move on to the next slide. Let's see. So backup and cleanup time. So what are some of the typical year-end so we want to start a new fiscal year fresh. And then some of the tips that we recommend, or some of the steps that we recommend, are updating your accounting policies and financial calendar. And not every organization will have a policies and procedures manual, but every organization has some kind of procedure that they follow, whether or not it's documented or not. And we highly recommend that you document it, because oftentimes it's just one person or maybe 1 or 2 people that are doing these things and they know how to do it. But if somebody else comes on board, it's so much easier to have like a written document, so then someone else could follow it. And these policies and procedures are always changing, and it's very hard and it's very tedious to update your policies as they're changing. So at the year end, it's a great way to kind of like reread your policies and procedures and say, is this what we're still doing? Oh no, we moved timekeeping systems. Let's get those those procedures in place. So reviewing them.
If I may expand a little bit more on the accounting policies.
Yes.
So policies may not only be written. I know that people learn differently. Some may take advantage of looking at things. So sometimes, with infinite amount of options right now to have these video sessions, one of the options that our team uses is what is called screen sharing. So probably just like right now, we're recording this session. You could probably schedule a meeting, record the session, perform the task, and save it. And that way, whenever someone wants to has a question about a written aspect, they can look back to a video and see how that is done.
Yeah, no, that's a great point. I mean, you know, I'm more of a reader, or like I'll take screenshots, but I know that others will like it better if they're watching a video and they can actually see, you know, okay, I need to go to this screen and, you know, go to this menu item. So that's a very good point. And yeah, but whether or not it's a video or a written policy, you always want to review it, because, you know, as things change, we want to make sure that we're staying up to date and being current. The next thing is to create backups, and it's very important to create a backup of your accounting system file. I'm not actually sure what type of accounting systems you use, but I will say, like QuickBooks Online or things that are online on a cloud server, I think you have to kind of like have a specific subscription to have a backup, but those companies will provide a backup for you. If you're using QuickBooks Desktop and you're maintaining it on your own server or even a remote server, like then it's easier to get a copy, like a backup copy. And we recommend, you know, getting a backup copy as after you close every month, and definitely at the end of the year, and saving it to like another location, just in case, so you have those files. Let's see, and cleaning up your chart of accounts, you know, kind of along the lines of updating the policies and procedures. You know, you want to look at the chart of accounts to make sure that they're still current, following things that you use. If you're getting different revenue grants, you want to make sure that you have those in, or if a grant has already been used up and you no longer need it, you can inactivate that account. And ideally, you want to make these changes prior to starting the next fiscal year's accounting. So your fiscal year's budget has all of the current accounts that you would need, or that you foresee needing for that year. And we like numbers. So I do find that numbering the accounts are often helpful, because you can kind of categorize them. Like if you use, you know, like 1,000, or categorizing them by numbers. And reviewing and inactivating not just a chart of accounts, but also your vendors, your donors, your customers, inactivate any that are not needed. And I know that some accounting systems will actually limit the number of, you know, customers or vendors that you can use. And so by cleaning this up every year, it allows you to make sure that you have enough, you know, enough room for the ones that you will be using for that current fiscal year. And I don't think we've asked, but if a lot of companies will use time codes in their timesheet system, you also want to make sure that your time codes, which usually will refer back to a specific grant or project, that those are current. So anything, again, that's done, you want to close those out and then inactivate them. Any upcoming ones, you want to make sure that they're open and available to those individuals who will need them. Let's see, and fix app sync issues. So if your accounting system connects to a third-party app, a lot of people use Bill.com or Expensify, you want to make sure that if there's any sync issues, which hopefully you won't have too many at the year end, because every month as you close out the month, you kind of get those issues resolved. But especially as we start out the new year, you just want to start off with a clean slate. And so fixing any of these sync issues at the end of the year is a good tip to do.
All right, thank you, Tracy. 990. All right, so what is a 990? So some of you may already be familiar with the 990. So the 990 is an annual reporting return that certain federal tax-exempt organizations must file with the IRS. Okay, and so this 990 compared to individual or certain corporate tax returns, they're publicly available and they can be easily accessed through the IRS website. In fact, there's a section where you can type in the name of any nonprofit within the IRS, and it will show you the different submissions for the 990 that the company has submitted. Okay, so 990. You may be wondering when is this due? And so the answer to that is that the 990 is due on the 15th day of the 5th month following the end of the organization's taxable year. Okay, and so this taxable year maybe it's the same as a fiscal year. So if an organization has a calendar year as their fiscal year, this would mean that that 990 would be due by May 15th. But if a organization such as one of our comments said ending on 6/30, that means that 5 months after, on the 15th day, that's when their 990 would be due. If we may go to the following. So what is your 990 filing date for those of you part of organizations? If you're on a calendar basis, that would be May 15th to be precise, unless there's an extension. All right, and so 990. So what documentation is required to prepare the 990? And so there's many type of documentation that is required for this one. But if we would like to summarize, we can say that the 1090 series forms, which includes the 1099K, the NEC, the MISC, the INT, and then 1096 will be important 1090 forms to have. So to go over each one of those that I mentioned, the 1099K, that one you would receive it if, for example, you have a merchant processing system like the services offered by UST, where at the end of each year you will receive a form indicating how much money or how much revenue was received by that processing system. The 1099 NEC and the 1099 MISC, those would be generated. Those would be all of the forms that you would be generating after collecting the W-9s from your vendors and subcontractors. And then finally, we have the 1096. And so for those that submit their 1099s online, let's say through Intuit's online filing services, generally 1096 are not generated for online submissions. So unless an organization issues 1099 through paper and then mails them to the IRS, it's only then that a 1096 is required. Additional forms include the W series forms. This includes the W2 and the W3. The W2 is the employee earning statement. So each of you, if you're on a salary or an hourly compensation as an employee, you will be receiving a W2 by the end of the year. And then the collective of all of the W2 forms is reported on a form called the W3. And so the W2 and the W3, these are submitted to the respective agencies, to the Social Security Agency and to the IRS. And these forms are important to be provided to the tax preparers. In addition, there's monthly and quarterly state and federal forms. Some of you may be aware of the 940s, the 941s, the state withholding, and the unemployment forms. All of those, it's important to have them on record. So another monthly task that you could do, or in fact a quarterly task, is that whenever these reports are available, to save them on your computer or to save them on an online server, so that when it's 990 preparing time, you could just easily pull them and provide them to your preparer. Additional reports include the trial balance, the general ledger. So these are going to be showing starting, adjustments, and ending balances. And then as many of you have noted in the comments, it's important to have copies of the bank, credit card, and loan statements, not only for your accountant, but also for future audits and 990 preparations. Okay. So you may be wondering for the trial balance and general ledger, if we may go back, you may be wondering what accounting basis to use for those. And so there's two accounting bases. There's the cash basis and there's the accrual basis. Okay, so the way that you would be running these two reports, the trial balance and the general ledger, should be consistent with the audited financial statements. So for example, if the financial statements are run on an accrual basis, then the reports that have to be provided to the tax preparer also have to be on an accrual basis. But if you run the financials on a cash basis, then these two reports will be provided to the tax preparer on a cash basis. Now we may go to the following. Okay, so we've been mentioning all of these forms. So you may be wondering why should someone else be preparing that 990 if I already have an accounting firm? So the reason why nonprofits may choose to do this, and in fact we suggest this to many nonprofits that we work with, is that there are many benefits, and the main one can be summarized as that there's going to be two different set of eyes looking at the financial statements. So that's going to give you both the financial and the tax reporting perspective on the accounting data. And then if there's any questions that arise or material misstatements that apparent notices on the financial statements, it allows you to clarify and to ensure that the accounting processes are correct. And finally, we have the contribution statements. Okay, so contribution statements, what are they? So a contribution statement is a report prepared for each donor that shows all of the givings for a particular date range. The contribution statements are required to be issued for contributions of 250 or more in a calendar year, and these statements must be sent to each of the donors no later than January 31st of the year following the gift. So even for those that are on a different fiscal year basis and not on a calendar year basis, these contribution statements still have a deadline, just like the 1090 forms and the W series forms of January 31st. Okay, so we do have a question for all of you. If you could name two examples of organizations that are required to issue contribution statements into the comments, we would like to read your opinions. Okay, we have charities. Good. That's a good answer. Any other organizations that are required to issue contribution statements? Foundations, correct. Foundations, correct. Could anyone name a foundation from who they have received a contribution statement? Yep, churches, they do. Okay, so yeah, great answers, all of you. Yes, all of them are correct. Churches and nonprofits based in the US are required to issue contribution statements. Okay.
Mario,
so,
can you clarify what the correct answer is generally for that question?
it would be churches and nonprofits based in the US.
Thank you.
Okay, and so what does a contribution statement include? So a contribution statement, just as pictured, should include the name of the organization, as you can see here on the top of the letter. It should also include the amount of cash contribution. It should include a statement that no goods or services were provided in return for the contribution, if that was the case, such as the one disclaimed in this contribution statement, and as well as a list of dates and amounts of donation. One of the things that a contribution statement should not include is the donor's social security number or tax ID, if they don't have a social, on the acknowledgement letter. And separately, if there are any non-cash contributions, these contribution statements should have the description, but not the value of the non-cash contributions, a good faith estimate of the values, and a statement that the goods or services, if anything, were not provided in return for intangible religious benefits. Okay, next slide. So we've said that contribution statements are required for donations above 250, but what happens if someone contributed less than 250? So in that case, although a contribution statement is not required, we do recommend that your organization issue a contribution statement so that you can engage with donors and communicate with them in case in the future they receive a statement that has an amount of 250, their expectation of what this contribution will include. So as a key takeaway, remember that we may go to the next slide. Contributions above 250 require a contribution statement, but for those under 250, it is recommended so that contributions, so that it may encourage more donations. Okay. So this gets us to the end of our webinar, but definitely like to hear more from you. If you have any questions, please type them in the comments. You may unmute yourself. Available for you.
Yeah, we're running a little early, so we have plenty of time for question and answer. If anybody's got a question that they'd like to ask, honestly, just go ahead and unmute yourself and ask us.
So this is Jim. I have a question about QuickBooks. You mentioned QuickBooks Online Backup. You need to have a residual backup in addition to QuickBooks Online Backup? Is there a QuickBooks Online Backup on the online version, or do I need to add something else?
Right, good question. Yes, so QuickBooks Online, they do have the backup option, but it's only exclusive to the highest tier. That version would be QuickBooks Online Advanced. So if you want to obtain Intuit's own backup service, you have to subscribe to that version. But if let's say you don't have a need to subscribe to upgrade to that specific advanced version, there are other apps in the QuickBooks Marketplace that you could use. If I may suggest, there's the option called Rewind, which is available to all of the other QuickBooks Online tiers.
Hey, Gerardo, this is Matt. If you wouldn't mind emailing or providing that as an email follow-up to the group, or we can figure out how to do that so they all have it, or enter in the chat so they know it, that'd be great. And then actually to follow on that question, to the why of it, the reason for the backup, even with QuickBooks Online, is that sometimes something goes wrong or something gets changed in your books. And I don't know if you've ever been there, but I've been there, where you look at a report in the current month and you look at it compared to a report you pulled down months ago, they don't match. It's hard to figure out why. And by having that backup, it's more about, from my perspective, it's not just about having a backup for disaster recovery. It's also sometimes you can go in and find out what changed, what transaction was entered, what moved. You can do it through the audit files, the audit transactions as well, but I find that to be a very valuable thing to have. And again, as a board, I'm sure if you've ever had to do it, you supply a monthly statement of activities and then something changes in a closed month, you want to be able to explain why. So does that make sense as the purpose of it?
Yeah, it does. Thank you very much.
Okay.
I'm looking at this is Jacelyn, by the way. I'm looking at some of the questions that people asked in the beginning of this webinar, where a lot of people just said they want helpful tips on how to close the end of the month. Now, we've talked a lot about, having that monthly cadence and just making sure that you're doing everything on a monthly basis so that the end of the year is just super as smooth as can be. And I was just wondering, for the people out there, how many of you guys actually use a month-end close checklist? That's something that we use for all of our clients at McKelvey Group. Do you guys have something like that in place? No.
And so, yes, and to follow up to that, I know that some people do have different learning experiences with Excel, and so if it may be a little bit difficult to create what is called a closed checklist on Excel, there are many services online that even us, our accounting team, uses, and one of those is called Trello, which is basically a free service which allows you to create different checklists. So I mean, even with remote work and everything, it's made it so much easier for us to just work off Trello and as an alternative to using Excel spreadsheet, just because of the availability. So if, instead of creating an Excel, you could just sign up for Trello, which, I mean, they have a basic version which has been more than enough for us. So I do recommend that. If not the Excel route, you could just use an online version.
Wendy is asking, is it Trello? Yeah, that's correct. It is Trello. But like Gerardo said, I mean, you know, Excel is perfectly fine. I mean, heck, you could even do a Word document. It really doesn't matter, just as long as you have some kind of template that you can use on a monthly basis. Our templates usually have the task, when to do it, who did it, when it was completed, and we just go through it every month, just by rote every month. And that way you're not missing anything. And then by the end of the year, you're just like, it's pretty much all done except for cleanup items. So
Yes, and alternatively, for example, if you know that there's gonna be a specific task that is due by a specific day, I mean, you could just email yourself within Outlook. You could just schedule a meeting with yourself so that whenever that time comes up in the future, it's gonna show up in your calendar and you can easily remember yourself.
does anybody have any specific questions they need help with that, we could address right now? Maybe an issue you're having at your organization?
Yeah, I think for everybody, Jason, can you tell me how you clone yourselves so that the people have to, they got to do all this extra work to get things done? How they get it done? Because I'm still trying to figure that out myself.
What?
No cloning actions here? It'd be nice.
Policies and procedures, like Tracy said earlier, we create, procedures and policies and training videos, and that way it's just, everything is not relied on just one person. So we always have a backup person. If one person's out, the other person can step in and complete the task, and that way you're not, you're not stuck having these, not completing things when they're supposed to be done and holding things up. So that's what you mean, Matt?
Sure, we'll go with that.
Okay.
If somebody does figure out the cloning, please let me know.
If a universal request is what you're saying, yes.
It is not easy, but we're reminded that once you've cloned yourself, it makes so worth it. All that investment and time and training somebody. It's, it makes everyone's life easier, and it's a team effort. So
it does, and I mean, reading John's comments, it summarizes everything that we've said. Reminders and detailed checklists are the only way to ensure repetitive tasks are done the same way every time and on time.
Agreed.
If anything, your takeaway out of this webinar should be that ensuring the accounting processes are correct, properly documenting, it's gonna save you a lot of time.
And not letting things wait. Like if you see an issue, which you say, Gerardo, you see an issue at the month-end close, like fix it then. Don't wait till the end of the year.
Definitely.
When you have a million things going on, trying to like get forms out and whatnot. Yeah. Okay, well, that's all I have.
Anybody have any remaining questions? All right. Well, I will go ahead and pull up my screen share and wrap us up. All right, you should be able to see my screen now. Actually, I'm not, are we seeing the correct screen? One moment. Okay,
The
great.
final thoughts screen.
Final thoughts?
Yes.
Okay.
Sorry, I have two monitors and it was not highlighting the monitor that I have up for some reason. All right, I apologize. Gerardo and Tracy, Jay, Sloan, and Matt, thank you so much for such an informative presentation. I hope everybody here feels like you learned something new that you can take back to your organization. As a thank you to our instructors and to provide you with an actionable item to walk away with, we ask that you put in the chat now one last thing, that's what your most important takeaway was from today. And as those answers are coming in, I will go ahead and wrap us up. We have a great calendar of events coming up for UST Ed. Please visit our website for upcoming webinars and to register. That's at ustranscorp.com/education. And finally, I just want to remind you that there's been some valuable information entered into the chat, so be sure to save that before you log off. So I believe that wraps us up. Be on the lookout for an email from Julie Duncan with a recording of this webinar, and also a separate email from our presenters containing their slide deck and any other relevant information. Again, thank you to Tracy and Gerardo for being our instructors today. Did you guys have any final thoughts or comments before we wrap up?
Well, it's a pleasure hearing from all of you. Definitely, we'd like to keep in touch with you. Any questions? Do not hesitate on emailing us. All of your questions are welcome. Thank you.
Thank you so much.
All right, well, thank you both, and thank you to all of us who joined us. Have a wonderful rest of your day, and we will see you next time.